What is a refinance, and when is a good time to refinance my mortgage? In this video, we'll cover what is a mortgage refinance and when can be a good time to explore refinancing your mortgage. A mortgage refinance is the process of paying off your existing loan and replacing it with a new one. For example, let's say you currently have a mortgage for $300,000 to be paid over 30 years at a 5% interest rate. That comes out to $1,610 each month. You hear from your lender that mortgage rates for a 30-year loan have dropped to 4.5%, and you decide to refinance into a 30-year mortgage at a 4.5% interest rate. Your payments would now become $1,520 each month for a monthly savings of $90. Lowering the interest rate on a mortgage when rates have fallen to reduce monthly payments is the most common reason for refinancing, but there are many others. For example, you may want to build equity faster. If your income has increased since you took out your mortgage, you may want to refinance into a shorter term loan, for example, from a 30-year to a 15-year mortgage, to build equity more quickly. You can also refinance to change from an adjustable rate to a fixed rate if you think rates are going to rise in the future. You can also change loan types. For example, if you started with a mortgage with a higher interest rate like a jumbo or FHA and have paid down the principal to qualify for a lower rate conventional, you may want to consider refinancing. You can also use refinancing as a way to eliminate mortgage insurance or consolidate a first and second mortgage into a single lower rate mortgage. And if you've built up equity in your home, it could make sense to use a cash out refinance for home improvements, to consolidate higher interest rate debt, or pay for other financial needs. A few things to consider when thinking about a refinance. Similar to a purchase, a refinance has closing costs. Closing costs for refinance are typically less than those for a purchase and can be 2 to 3% of the loan amount. A lender may also order an appraisal to determine the market value of your home, although in some instances an automated valuation may be sufficient. And similar to a purchase, a mortgage refinance requires reviewing income, savings, and credit. To learn more about the refinance process, watch our video, What is the process to refinance my mortgage? It's always a good idea to consult a mortgage lender before starting the refinance process. A lender can help with sharing current mortgage rates and costs to refinance, providing estimated savings relative to your current mortgage, sharing an estimated value of your property, and guiding you through the mortgage application process.